Hey guys, it's Friday, August the 19th, and it is another crazy day in the markets. I'm going to go through it fairly quickly today. We're going to talk about some of the stuff for next week and how to set up. And then we're going to talk about John Deere, which is probably the more interesting earnings report. And then I'm just going to kind of go through it a little bit. Past performance, that's not indicative of future returns. As you know, we always say that, but I want to show you something. First of all, the market is all red, but crude oil is up, which means that most of the names that we've been very bullish on are doing fantastic. And, you know, I don't do meme stocks. So on days like this, nothing changes in my portfolio, which is awesome. I can't say it's always like that. And I always worry that the market gods will penalize me when I'm too cocky. So, you know, thankfully, this is how it's going. But, you know, in general, given where we are in the part of the year, and I'm going to show you that clearly, you do have to be really, really careful. If there's certain specific securities and you're part of the Gurula family, you gotta let us know. We're happy to always provide what we think, what we might do. Again, not investment advice. You should go to someone local to you so that you can get more specific comments on your portfolio. But we are in a very particular year in a very particular scenario. And what I would say is that we have been talking all along that we kind of want to stay market neutral if we can. Today, I took even more profits and hedged out a lot for a reason. I also want to just show you this. This is the S&P today. You can see most of it is kind of just a reversal, right? You've got everything that was green before red, all the big cap tech, which is what's driving the market indices down themselves. And then you've got healthcare, which most of healthcare is doing great, big cap tech, big cap healthcare. Now, I can't say that's true of like the middle part of big cap, because there were absolutely massive differentiations in who was doing well and who wasn't throughout the S&P 500. And you're seeing it in today's performance more than anything. Unambiguously, though, almost all of energy is doing fantastically. There's only one or two exceptions as I've listened through to the securities. But I gotta say, it is a very differentiated market. I have 50%, just slightly over 50% doing well and 50% doing poorly. And then everyone kind of a little bit more conservative through the year. And what we really want to care about is the timing. Okay. So like this week on the economic data, there was nothing today, but we had quite the week. Next week, you've got manufacturing numbers coming out. That actually is going to be more important than normal because we're really trying to figure out what's going on with the slowdown. You've got PCE inflation, which will just basically mirror CPI most of the time, but this is what the Fed watches. I don't know that this is going to be, especially Friday, August 26th, as we start to think about Labor Day. I don't think that this will be the core thing, the key thing, right? And then Thursday, you've also got real GDP coming out, and people are starting to care a lot because we're really watching how is the US doing versus the rest of the world. We talked a lot about that on yesterday's video, which we'll post this weekend because we're starting to post them to YouTube faster. So we went through the FOMC meeting. It was the most non-directional, let's call it, FOMC meeting thus far. So definitely watch that video if you haven't already. But, you know, we've got the monthly options are expiring today. And because more than any other time, I heard this on the CBOE's earnings call, but it was also the case on all of the other exchanges as well. Options volume is actually up. So people are hedging their positions as they should. And I think if you are working with a broker dealer and they don't offer option services to you, you should already, then you should investigate and see if you can get some thoughts on that. Because for a lot of folks, especially the what am I? I'm a Generation X. Yeah, I'm a Gen Xer. You know, we've owned these things for a long time. Letting go of them doesn't make any sense. So, you know, if you own Amazon really, really ridiculously low, as much as I'm bearish on it, and I did take some bear exposure on it today, which I'll show you why, you don't necessarily sell it for tax law reasons, but additionally, it just may not make sense. You know what I mean? You've just owned it for so long. It's not necessarily the thing you want to do. Now, I do want to show you why you want to be skeptical. So we've got monthly options expiration today, creating a lot of extra volatility. And then we are getting closer and closer to Labor Day, and a lot of people are just gone. Volumes have been weird. And if you're in financial services, there's been a bit of a stressful year. So you may just take gross exposure down going into the holiday. Now, because most portfolios are technically long, there are very few relative to the number of, there just aren't that many short sellers out there, like pure play short sellers or hedge funds that can take net and make it totally short. Okay, don't worry about the jargon on that. What it naturally means is that when the industry as a whole decides to remove exposure, remove the amount of money and just go to cash, it will always play out looking very bearish. And next week would be a major candidate for that to be the case, versus using that as a massive buying opportunity to go into the last week. But we will know on Monday, which it is. Now, it could be the case that people are like, no, I think the back quarter, the final quarter is going to be a fantastic. So I totally want to be fully invested when I come back for Labor Day. There's a possibility of that, and I'm going to show you why there's a possibility of that. I always, from time to time, FinViz, great resource, can't say enough positive. This is what it looks like if you go for what the quarter looked like for a lot of folks. Green, green, green. So if you were underexposed through this quarter in certain names, you look like a little bit foolish. So there is a possibility that someone's like, oh, you know what, maybe. And then if we dial year to date, you still have quite a lot of the major big cap names red. So there are definitely some values in here, not the least of which is Pfizer, which I keep screaming at the top of my lungs. No one wants to give me credit. So this may end up being a 2023 before I'm right. So I'll just have to admit that I was wrong for this year thus far in Pfizer, but this is a company that has a ton of cash. It has very little risk to paying any kind of dividend, which is now 3 and change %. And that's always been the point at which you long-term hold pharma companies for if you're going to set it and forget it for a lifetime. I've done that for more than one pharma when the dividend yield has gotten so crazy and there's zero risk to any payment of it. Not the least of which is someone laughed at me when I bought Merck last year, but whatever. Okay. Anyways, this is what it looks like right now. Now, I will say that for the final quarter, those people who think that energy is overdone and oversold, it is possible that you look foolish if you don't have energy in your portfolio at the end of the year. So you might just see people that were underweight energy bringing it up to weight. What you're really going to see in this final quarter, as well as in the final week before we set up for the final quarter, is a lot of window dressing, a lot of preparation for what they want to do in this last quarter. And that will lead to some very suspiciously strange activity in the marketplace, which bodes really well for my colleague Richard, who does this first thing in the morning call I think he starts a little bit before 9:30, before market open. Check him out at grulla.net, grulla.app. Just type that in and you'll find the link on the website over to him. So just realize that all of that is a thing that you should check out. He's more of a day trader, so next week will definitely be a trader's market. But I will be watching it like a hawk because it also may be opportunities for fundamental people to get the exposure that they want. So I am mostly fundraising today and making sure that I have plenty of cash to enjoy that next week. Now, let's move on to what I saw in John Deere, and then we can take it out. Oh, sorry, earnings next week. We do have actually some big guys reporting. That is why it's really towards the end of the week that you will see the final hurrah of whichever direction Monday sets up. Monday's always on these on an off week, I'll call it, but still technically an earnings quarter. There's nothing on Monday, so we'll see which direction people are trying to do. Sorry, this is this week's, obviously. So Tuesday we've got Intuit, and that's not a big deal. I mean, yes, it is. If you own Intuit, obviously we'll be watching and listening in. I'll be curious what they have to say as relates to tax season, because I'm sure they'll have a lot to say. And sometimes in the third quarter, or really the first quarter, it's interesting to take another look at Intuit. Depends how it trades. Because we've got strangeness in the mortgage market that doesn't touch Intuit, but might affect the way that the sentiment, I will be actually starting to pay a lot more attention to that one. Then we've got Salesforce and NVIDIA on Wednesday, obviously a big deal because there's so much day trading going on in both of those. And then on Thursday, you can't give up yet. It's really Friday that you start to go off on vacation. You've still got your Dollar Tree and Dollar General. Those are controversial for various reasons. So we'll talk about it next week. Ulta as well. I want to kind of watch that because if it gets brutalized too much, my suspicion is actually they're going to be doing okay. But let's just take a look next week and see how it trades earlier. So that's going on. And then now I want to just talk a little bit about John Deere. Now, I didn't take a position John Deere. It's trading down today. It wasn't that bad of a quarter, okay? Like actually things were okay as far as things go. And guidance was kind of neutral. I don't know what people are thinking with John Deere or what's going on. That's why I've kind of pieced out of it a little bit. The fact is it's doing pretty well. This is its guidance. And I got to say, I love John Deere for its macro. They do really have some really talented people that are doing kind of market analysis on agriculture and what it looks like across the globe. So first, I wanted to just show you where precisely they're expecting growth. And so US and Canada, they still expect growth, even though large ag and small ag and turf, they're still guiding flat for the year. But overall, the US and Canada, they're expecting to grow pretty well. And then South America, specifically tractors and combines, that's a pretty strong growth rate for them. And there was a lot of extra commentary. Asia down moderately, Europe up 10 to 15, sorry. Sometimes hard to get this across. But anyways, the point is that they're seeing and they believe that Latin America will actually be plowing more acreage than normal, than it's ever plowed. Actually, I think is the way that they said it. So watch for that because as you know, that has impact on how we're thinking about fertilizer for sure. And here, I want to show you a map. It's just a resource that I always look at from time to time if I get confused at what's going on around the world. Note that in construction equipment, they're still seeing pretty decent growth there. That's kind of a big deal. Because, and we talked about the infrastructure bill there by Forgets got passed last year that should start to show some fruition in the fourth and first quarter of next year, fourth quarter, first quarter, and then so on and so forth. Road building still remains really well. So there are some places where you just changes don't happen, so to speak. But we did have movement and population transformation over this last period. So, you know, that's what that's all about. But I want to show you one last thing, which is why I'm always bullish fertilizer. I use this website from time to time. Shoot, did I do this wrong? There's a website, supposed to be a link. Well, so much for that. I'll tell you, sometimes there's a link of the fertilizer maps. I'll have to wait for next time to show it to you. I'm not sure why. This is why I don't like Microsoft that much, but you know, it is what it is sometimes. But there is a website that essentially tells you how much NPK is used in every different place. And the reason that I find that really relevant is because when you are trying to, goodness, let's see if it goes like that. Oh, so frustrating. Anyways, the reason that I find that very important is because when you are trying to understand how to think about what part of the world is doing what, it actually does matter if it does matter where you are, how much fertilizer you use, and what's going on as it relates to that. And what I wanted to do was really show you, here we go. Okay, I found it. What I wanted to show you was that this is from 2017, but it's not a really big difference. And a lot of this just has to do with what the nature of the land is, okay? So that it's not gonna change so much, but this is Our World in Data.org. Love this website because I'm a data nerd, if anything else, but they do have /fertilizer. They do have a section that just talks to what type of fertilizer. This is a beautiful map. Total nutrients, you know, they can kind of show you where's the most beautifully nutrient areas versus which ones need to add which fertilizer to it. Input synthetic fertilizers, you know, so you can see here clearly, since it's going to be South America and Australia that's going to be producing food for us pretty soon here to increase that grain number. Phosphorus, you can see nitrogen, the darker the color, the more they lay down to try to make it work. And so you can see how dark in every single type of nutrient that's going on Latin America is. And it just tells you it's part of the reason why I like Mosaic so much. China also used a lot of potassium. They don't really import from us. It's just that this part of the reason why they're not giving it to anyone else, so to speak. And these wonderful resources, it's amazing what's available online. This is 2017, isn't changed, okay? Because soil is what soil is. All right, with that, I'll go ahead and hit the stop button. Any questions?
Hey, man, can you foresee oil going up and the market going down?
Yeah, it happened in 2008. People forget about this all the time. For the first 6 months of 2008, until we had Lehman correct so aggressively, even afterwards, for a bit, you had oil doing fantastic. Like, just go ahead and run yourself a little chart and just take a look at where bear is. I'll try to see if I can't run one sometime next week if I can remember. But yeah, oil,
so
oil and all that.
It just does not have that much weight, that big a weight in the S&P.
Oh no, that's not even what it is. Look.
No. I mean, like Microsoft and Apple have a huge weight in the S&P. So.
Oh, you mean like just selling of the indices pushing down energy? Is that what you're thinking?
Right.
Yeah, that's a good point. I hadn't thought about that. Index selling is really going to push down those big cap tech names first and foremost. So yes, you're right. The weights themselves are smaller, but and also the weirdness of oil and gas is that you got two dynamics that are really helping them. Number one, they're fully funded. They're in really good shape. Got three. You got a few. Let's just say it's a few, so I can just name them off. Number one, they're in really great shape financially. They don't need access like they did even in 2008. They were in great shape, but right now it kind of almost feels like that. As long as you don't have a massive liquidity situation that just takes everybody out of the market, that's a different story. Okay, but these guys are really well funded. OXY. Everybody loves to be like, oh, Warren, la, la, la. Why is he buying it all? Okay, they paid down like $4 billion worth of debt this last quarter. You have any idea how stupidly large that number is? It's crazy. That's despite buying back a ridiculous number of shares. So, these are companies that are shoring up their balance sheet like crazy. It's just pretty phenomenal. So they're really in a great condition. That's the first thing. The second thing that's really important is that they're paying back debt. I mean, they're paying dividends, all of them. And in a world, even with rising interest rates, where you'd think, oh, now you got to give me more dividend because you're not looking as exciting as the risk-free rate of return, which currently is only the U.S. Treasury because of Brexit and all this craziness that's going on in Europe. Okay, cool. Well, it turns out they're way over the hurdle for anything that you'd be concerned about so they definitely pay a dividend. That's very delicious. When you get a crazy market, you're going to see some flooding into dividend yielding stocks. That's the second thing. The third thing, this is a commodity-driven bear market that we're in right now, okay? Let's just call it what it is. You want to call it a bear market, that's fine. You want to call it a recession, I know that's really controversial, but let's just call it a bear market. Commodity-driven bear market means that there's not enough supply relative to demand. So all they're going to do is charge what the market needs to charge. Even if they're trying to be good about it, they can't be good about it because the market's going to pay what it's going to pay globally. So all of them are going to continue to be way, especially here in the US, way above their cost of capital. And they're just going to return that back to shareholders. And all of them have kumbaya, hand in hand, said, we will not make dumb acquisitions. There's not one guy in big cap land that is not sworn off dumb acquisitions, which I think is amazing. And it's a testament to what they learned in 2008. And so this is just a fantastic industry to continue to do really well in, that people will go to because it's safe, it's cheap, and as long as we don't have a massive liquidity crisis, that's why I'm paying attention to those aspects of the FOMC. Definitely watch my video from yesterday. We should be in good shape. My long answer to your very short question, as per usual, but I think that's what you're trying to get me to say. So.
You're backing up.
Yeah.
It looks to me like the Fed is in trouble. I mean, and oil is probably the canary in the coal mine because it, is a part of inflation. So, I mean, if it goes way up, they're going to have to continue to tighten, raise rate, which makes the overall market go down.
Okay, so they're already definitely thinking at least 50, but he's got one thing that's helping him out for 2 months. That's why you gotta be really careful through the end of the year. He's got, and that is seasonality, which I mean in a very particular way. So this is going to help out the Fed for a very short period of time, and it'll make the markets, depending on whether or not people get keen to it right away or whether they set up differently and how early they want to set up. And that is this. We have a big, huge level, like, even though I've been very clear that I don't think we harvested enough for the rest of the world in America, I do think that we harvested plenty for the American public. And as a result, it's really whoever's choice on whether we decide to help out our own here and modulate inflation, or whether we ship that overseas. Okay. And, there's pluses and minuses to both, because if overseas gets too crazy, that always comes back to bear in 2023. But, you got, maybe we'll get a lucky break off of Europe, but you got about harvest season, September, October, November. So for those 3 months, you might actually get food modulating, in which case, for all the folks that are watching this that are more like me, if you see a good sale, you go ahead and take advantage of it to feed yourself and whoever else is in your family household, right? Okay, so that will help him. Plus, that first initial time when everything goes to slaughter, I mean, even though I guess now they kind of bring them to market, better than I do, a little bit differently than it used to be, more seasonal, but it is what it is. So that sometimes has a tendency to lower prices in the short term in a beautiful way. And you just need a little bit of lowering for it to look cosmetically a certain way for the rest of the world, or for the United States. And it's cool. Okay, so you've got that benefit. And then you've got the fact that we're going to come out of, we got one more month, because sometimes September can be a little awkward. So we've got one more month of potentially crazy weather. By October, that subsides, but even by late September, you start to get normal temperatures. As long as we don't get a cold winter, as long as it doesn't start to snow in December, he's got that little benefit while everybody on the earth tries to reconfigure their energy situation. So those are the two positives that they have, is they're coming out of this really crazy summer period, and they've got 2 months of respite. And then, news flow will probably spin it in all kinds of different directions. And that always takes the market in a particular way, but it allows him to do some calm things as relates to communication with the investment community, as well as what is he going to do on rates.
Right. It looks to me like, the rates the policy so far has not slowed down the economy. Yeah, it has hurt.
Yeah.
Way overpriced anyway. So
yeah, the major thing from yesterday, which I'll repeat and reiterate, because it can't almost be reiterated enough, is that was the most confused FOMC meeting, meaning like the meeting itself, you can only imagine being in it. You had more disagreement than normal. Meaning some people either think the GDP number is wrong and we actually grew GDP and it will get revised upwards. And some people think the unemployment number is wrong and that will get revised in a way that's crazy as well. This is the first time in a while that I've ever seen meeting notes where people are very clear that they think something's wrong with the numbers. And that isn't being, I've been watching a lot of the press, and I can't say all the press, but I don't know that that's been communicated well from the nerds that typically are responsible for telling us what's in those meeting notes. In other words, that's why I highlighted those two data points that are coming out next week.
Yeah. Okay. Well, back to my original point. As oil can go up, it's inflationary and it will not help the overall market.
Yes.
Because of its weighting. Okay. Thank you, May.
One of the potentially intriguing things, this is why I just find it really fascinating, is that the airlines have managed to get pricing through. They're not discounting nearly as heavily as they have in years past. Plus, they're not flying long distances, long haul the same way, right? They're significantly reducing the mix of flights that they're doing are largely biased towards domestic. You're not seeing an international recovery yet due to various reasons. Okay. Well, we've had this beautifully, I think, synthetically low price in oil, because I really don't think it should be. And I'm on record for saying 95, it's a steal. So at 90, it's still pretty, I'm very surprised and shocked. Nonetheless, there's every opportunity for the airlines to hedge. And my suspicion is we're going to see something very interesting in the next quarter. You never know, because you can only do that in certain ways. So that's another thing that might, create a good scenario for companies that typically would be very, very dependent on fossil fuels, UPS, FedEx, the airline companies, et cetera, et cetera. So that's, as we think about next quarter, when those guys start to report, I think FedEx is one of the earliest. I'll be looking for that in a big way.
So I'm curious, how does it, I'm sure they're very, very sophisticated and they do hedge.
Yeah, they are. They're super
Where does that
sophisticated.
show in the balance? Where does that show in the balance sheet?
Sometimes they just break it out altogether. You know, like they'll just show you if they did a great job hedging. Sometimes they just show it to you and they'll tell you exactly what they did on their oil hedges. There is a section that often just shows derivatives, gain and losses on derivatives. And there were a couple companies that showed, there was one of the small cap, from time to time, people would throw me over a small cap company and ask me to do a little work. And it'll show in the balance sheet if there's a weird loss, they'll show you that it's from derivatives. And then when you investigate further in the notes, it'll clearly tell you what they were doing on the derivative side.
Yeah, they should specifically.
They should hedge. Totally into the wind.
Derivatives speculation too.
Yeah, I mean, I can't wait to see if they did it or not. I mean, for us as market nerds, you know, to us, it's the right call. From their point of view, I'm not sure if they're thinking, no, we'll just pass through fuel costs or something like that. I don't know how they would think about it as an executive. And then, you know, so it'll be, I'm really excited. I think this fourth quarter is going to be really unique because versus 2008, even in 2008, I don't think people really appreciated the dynamics and then the options markets and how to use them. I think some corporations were still coming up to speed on some of their programs. I mean, in fairness, like something like an Archer Daniel Midland is always hedged. It is what it is. That's the grain business. So there was nothing new for them one way or the other. But like, you know, the use of hedges and the liquidity that's transpired and the amount of trading and all that stuff. Even if the airlines were doing it, although quite a lot of them went bankrupt, they had bigger problems back then, 2001, then all the way through, and then back to 2008. And my point is this is their first real good look and at you know, this is the first time they've had a shot because of the speed and the duration and all this other stuff that is going on. And I'll just be really, it's going to be interesting to see what they figure out.
January 23 is 88 cents.
Wow. Yeah, they should take it. I mean, because like by then, if we have a cold winter, you know,
Right.
it's going to be bad. We'll know by January if it's going to be a cold winter. I don't know. It's exciting. Anyway, any other questions?
Let's hit CIX real fast.
CIX? Oh, CEIX. Console Energy?
Is that console?
Wait, is that what you're asking me about? My coal company?
Yeah, just real quick.
You know, here's the thing. I'm just kind of, because this market is so funky, I really think today's activity is people closing it out for the last quarter. Console's cheap. So there's nothing that's going to happen, but it's going to slowly but surely trade up. They're going to continue to pay down any kind. So their whole thing was that when they got to a certain debt leverage, they would start giving back money in dividends. And they're still now trying to, because of some of the legislations and changes, they're also considering buying back stock as well. And they were very clear on the call this quarter that they were going to go and talk to the board about buying back stock, since they were already on top of what, and both on top of and ahead of schedule at paying down that debt. So, you know, those are the dynamics. They're not having kind of problem. What's that?
It's been parabolic since 20. It's now 72.
Okay. Yeah. It's a great one. I mean, look,
yeah.
I think the only reason that people don't touch it is because they personally have a disgust for coal. And I don't know, if you go back to my February videos, for a while, I had a disgust for coal through March. And even when I first bought it, I was like, look, I feel bad that I'm buying coal, but I can't, you know, this is ridiculously undervalued and this is going to go straight up parabolic. And it has done exactly that. And not only has it done that because the price of coal is so crazy, I actually have to really double check, but I believe the valuation, from a valuation perspective, like what's it trading relative to earnings, what's it trading relative to everything else that you would necessarily use as a metric on how you would value it, after taking out the debt changes, et cetera. I actually think it's trading cheaper than where I bought it on a fundamental basis, not more expensive, even though the thing is almost doubled. So
Perfect.
it's a weird time. It's such a weird time right now, but you guys just be careful in these markets. If you can go to cash, just go to cash. All right. Any other questions? Any other thoughts?
None. Thank you. No,
All right.
have a-
Take care. Have a great weekend, everybody.